This next question is from Craig Caulfield of Queensland.
Good morning, Mr O'Sullivan, directors and all shareholders. I really enjoyed your opening statements, both of them, and I learned a few things from that, so thank you very much. I would mention that I am a founder of Bank Warriors and we're fiercely independent. So what I say may not represent the interests or the ideas of others, and I'm also an advisor to Bank Reform Now. Now Bank Reform Now has 15,000 members and followers. And again, I won't say I'm representing them all, but there's some further background. Firstly, let me congratulate you on the online guide that was provided so that remote shareholders can ask questions. Over the couple of years of COVID, there were difficulties across multiple AGMs with multiple banks, and I found that Westpac's yesterday, I attended Westpac's AGM, and ANZ's today was exemplary. So in this new environment, thank you very much. In contrast, CBA, for example, which was only 2 months ago, remote shareholders couldn't ask questions live. So there's a difference, and we'll put ANZ ahead on that one. Thank you.
I feel there's a butt coming somewhere here, yes?
I've got a big butt.
Yeah, right.
The Reserve Bank's 8 consecutive interest rate rises has not yet impacted ANZ customers in a big way. We know rising food prices, rising fuel prices, rising energy prices can add to the hardship of ANZ customers. Many ANZ customers are also transitioning from 2% fixed rates into 6% variable rates. This is no small wave. Reserve Bank Governor Philip Lowe pumped $200 billion of emergency, artificially low rates, which have started expiring. This 200% rate rise in such a short time is unprecedented. ANZ customers are anxious that how they will cope with financial hardship. I'm a long-standing ANZ customer. I've just hit my loan limit with ANZ, and ANZ has sent me text messages to remind me, which I've fixed up. But I'm worried too. Some customers can draw on savings, lines of credit. They could tap into credit cards, and I would say credit cards that are often thrust or packaged in to borrowers. So this will provide some delays, so the impacts of what's coming up might be delayed for these reasons. Combined COVID uncertainty, a forecast recession in New Zealand, and I know ANZ is the largest bank in New Zealand, geopolitical tensions that Mr Elliott talked about. It's understandable that we will also see mental health consequences. Banks and regulatory remediation systems, I've found, are inconsistent and not fit for purpose. I know firsthand how sustained failures in banks' remediation systems, failures detailed in ANZ's likely secretive APRA report that wasn't released, they can have terrible impacts on bank customers. Unfortunately and tragically, depression can set in as people, protections and regulators all fail us. Depression and suicide, especially in rural areas, is a tragic consequence. These traumatic impacts go beyond the industry label of financial hardship. Now, I would like to acknowledge Mr Elliott because in his speech, he sort of proactively referenced some of these things, that it does go beyond that. But I call it psychological hardship that bankers in the past have failed to consider. There's been a strong focus on financial hardship. Drawing on my own experiences of CBA's behaviour, my request for financial hardship was refused. Now, this is some years ago, but I know how deep the emotional and psychological non-financial impacts cut beyond the mere financial impacts. Post-Christmas, we're expecting spending will subside. Confidence will subside in the new year as a wave of rising costs take their toll. Directors of ANZ have known for years. We look back at now this is past management or past directorships, but the botched case of Charlie Phillip in outback Queensland. So the directors need to be aware of this. My questions are, why has ANZ systems, policies and processes ignored the emotional and psychological hardship above and beyond the financial hardship? And why hasn't ANZ employed behavioural scientists and psychologists to address this deeply serious issue now? Thank you.
Thank you, Mr. Caulfield. Thank you for your energy as well in representing or in being part of the Bank Warriors and all they do. I think the point you raise about the environment we're in is really important. You know, I would separate our thinking around our customer situation from the prudential side of the bank. Prudentially, we have obviously a requirement under the law to test mortgages and so on at a higher rate than what we lend at. Typically, it's a 3% above the interest rate that is current when you're making the mortgage, or it's a minimum of 5%. So prudentially, from a risk point of view, we're just getting into the territory now with interest rates where those tests took place. But your point is a really important point, which is, putting that aside, the impact on people of rising energy prices, of inflation, of rising interest rates and mortgage repayments is significant. And whilst on the one hand we can rationalize it, to your point, emotionally, it's a very difficult environment, especially for anyone who doesn't have a lot of flexibility. Shane mentioned earlier that our approach is to ourselves proactively look at our customer data and to see, can we identify and proactively contact customers who we think might be heading for some stress. And we have a number of options when we do that. And there are things like loan deferrals or recapitalizing the loan, or indeed in some cases, we may be best placed to persuade the customer there might be time to make a difficult but important change. Our policies are to equip our lenders with the necessary tools and sensitivity to take into account the customer's well-being. And Shane and the board have defined the core purpose of the bank as being to improve the financial well-being of our customers. So that's our guiding process as to all the decisions that we can make. We do have a number of staff who work dedicated to customer hardship and to working with customers to try and address issues. And as I say, we do our best to try and take into account the key concerns that customers may have. Shane, is there anything you'd like to add to my comments?
Only that I take your point, Mr. Caulfield, around psychological harm and hardship, and I agree with you, and we do see that from time to time, and I think you're right to point out that it's likely that that will increase as things get tougher for many in the community. We do actually employ psychologists, and we do have people on call to help us and advise us in terms of the way we interact with customers who are experiencing stress. I'm not for a minute going to suggest we always get that right and that there isn't more that we can do, but I agree with you that it's something that we can do a better job on. And Miley, who looks after the Australia retail business in particular, I know we've just made some changes in the way we structure our support teams, our contact centres, our complaints teams, our advocacy teams, and part of that I think is a good idea for us to go back and have a look and see if we can do more around psychological hardship as you describe it.
Okay. Thank you, Shane, and thank you, Mr. Caulfield.
Yeah, thanks very much. And there's not a one simple answer to this, but if the board could keep that in mind, the psychological issues, that would be appreciated. Thank you.
Thank you. We're here to listen, so we absolutely will. Thank you.